All right, good evening, everybody. Let's get started. So this is just going to be a quick webinar on swing trading. A few people asked about it, and we're just asking based off the volatility in the market, what's the best way to swing trade, which are longer term trades. To me, a swing trade is something that should be 2 to 3 months out. It's not something that's 1 month out or 1 week out. Could it work out in a week or a month? Week, probably not likely. A month, it could work out in this market in a month, just based off of the ridiculously high VIX, right? We're at a VIX of, I'm sure by tomorrow we'll be at a VIX of 40. And, the VIX before that, you could see, guys, for the longest period of time was hovering, look at this, 20s, 20s, 20s. This was during the that wasn't the March debacle. This was during the March debacle, right? The COVID crash, whatever you want to call it. And then before that, for years, we were at 12. So swing trading today is much different than swing trading at a VIX of 12. This wouldn't have even been swing trading. This would have been literally vertical call spreads or vertical put spreads. You weren't really swinging anything here. And then we got into just a high VIX level with the runners really run and the faders fade and other things are in chop. But what's happening is everything's happening quicker now. But this does leave an opportunity to take in volatility. So that is the approach that we want to use right now for swing trading. You don't want to put on your basic swing trade, just put on a call and let it sit, because you could be totally right on the direction. You could even hit the target pretty close to the time you expect to. But if this VIX, let's just say, goes back down to 25, you would probably make half as much at most that you thought you would if you were timing that trade correctly, just because of the volatility pull, which after the election, I'm not saying right after, like Thursday, but hopefully a month after, this VIX should start coming down. Two things keeping the VIX up. It's up this high: A, election; B, COVID. I think it's going to go up higher, I feel, at least this week. And then I think as the winter comes, if COVID keeps rising, if we have to shut more things down like other countries, it'll stay up, but it will also slowly trend down as we come back to normalcy. And then obviously we'll be out of the election campaigning cycle, which will bring it down at least 10 points, if not 15. But we might be living with a VIX from 20 to 25 for a while now, which is a different VIX than you're probably usually used to trading. So I just want to show you some trades that I was looking at this weekend and that we'll be looking on, because I will be entering a bunch more swing trades, because there are certain types of option swing trades. And of course, you could just use them in regular equity. But there are option swing trades that give you the availability to take in this volatility. And that's what I'm looking for, to take stocks I want and find a way to lower the price of the option, but also have a good reasoning for it. So if you were able to open my Google Doc, which all you had to do is request access, and you were able to, it showed you trades I was looking at for this week. And that's just some of them. I have a much bigger one, and I'll be adding to them all week. Just because the swing trade's on here doesn't mean it's going to trigger tomorrow morning. Okay, it's a swing trade. We need the trigger to actually happen, and we need to see the stock do what we think it's going to do to enter the trade. But these are trades that have very big movements they can make, and they also have time periods. Their time moves, a lot of them are based off of Fibonacci. So Whirlpool is one of them, and I'll show you the reasoning between each one. Homebuilders ETF was another one. Those were actually two short trades. Actually, I don't know if you guys know this, but Whirlpool is actually in the Homebuilders ETF, so we'll get into that one. Another one for the long side, Chewy. It's just looking good. It looks like it's going to chop around for a while, but then I do think into earnings it pushes up. And then another one is Caterpillar. And I have a few more that we're going to add to this. We just add to them as they come up on my scanners, or as I'm just running through charts and say, you know what, this looks right. And the only way to do that is go through certain different trading methods to find out what swing trades are right. And just because you find a chart that's right, like I found about 6 more. Well, you guys know I trade options. There were no options that were even feasible to trade these things, so they're not on this list. But I will still put some equity swing trades for traders in there to use, but I wasn't going to do it in this example. So let's start with Whirlpool. Okay. Whirlpool is part of the XHB. Okay. So what led me to Whirlpool? Okay. Well, I'm going to bring up a different graph for you guys to look at just so you could see. And you'll understand most of it. Some of it you won't. Okay. This is the XHB, the Homebuilders Index. Okay. This is most of the components in here. Don't worry about this. This is just looks different, but it's the same thing. Okay. What we have is 95% of the components in here, or 90%, if you look at it and run it through an equally weighted chart, are below their 100-day. Okay. So there are a few things holding up the XHB. What's one of them? Whirlpool. Whirlpool just had earnings. So Whirlpool is one of them, and the XHB itself is holding up. They both lost their 55. They both lost their 50. They're both below the mean, which is the 21. Just comparing these two for you right now. If you look at Lennar, lost the 100, lost all those other ones. If you look at DHI, lost the 100, lost all those other ones. If you look at Pulte, lost the 100, lost all those other ones. Actually, my favorite was LII, but the options just weren't liquid. This one looks like it's heading straight towards the 100, if not way below it. And NVR, another one, not liquid. But they are part of the group, so you have to look at them, right? You want to see what the group's doing as a whole. So Mohawk also just had earnings. So we'll see what that does. That wasn't high on my list, but I'm just curious how it reacts. But as you can see, bearish, 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 bearish. And JCI is another one that I'll be looking at. Right now it's neutral. Okay, it's showing a neutral rating. It's not showing bearish, or every single other one is showing a bearish trend. So neutral was here, and neutral was here before Friday. So let's look at Whirlpool. Okay, so what do we know? We know on Whirlpool, we got the 55 right here. For those of you that trade with me now, you know I look at the 55 and the 50 very strongly. If we cannot hold above the 50, we are probably going to break the 55. That will be our entrance. We know we broke it and tested it on Friday. A close below it would be our entry. What will we be looking for? We'll be looking for the 100-day, and then possibly Whirlpool have room all the way down to this 149.27, which would be this gap fill. Okay, because I think if it gets to the 100-day and the market is trending down, we will end up filling this gap. What will also happen at that time? The 200-day will pull up. Okay, probably right around the gap or in this gap. And the market in general will probably be doing a 200-day test. And this sector will probably get hit first. What else do we see in Whirlpool that I liked? It has a daily squeeze. Anyone that knows the squeeze method and how to figure squeeze and momentum? It's just starting a daily squeeze negative. Hasn't fired off, hasn't done anything. So, I mean, we could look the last time. Here's the last time it had the same kind of situation. Now, obviously, this wouldn't have been a swing, right? Because this happened literally in 3 days. It fired off, and then it just came right back up. This was just during the market churning. I think we're coming in this sector for a little bit of a pullback. You can see here, the same thing, losing momentum, died from here. I mean, March, everything had this, not everything had the squeeze. Well, it actually, most things did, but there is the death spiral, and you could go all the way back in time, even to a little pull like this. Okay. Now we could also look at a weekly, because it's the same thing. We're starting to lose momentum on the weekly. Okay. Is it negative yet? No. But you can certainly lose momentum on a weekly from here, which was 163, to basing at 138. Right? Don't forget, this is weeks. This isn't days. So we're on a weekly chart now. So I'm looking for that type of move, and I'm kind of looking for a reversion to the mean on the weekly, which we haven't did. And for anyone that doesn't know what reversion to the mean is, that's just the 21 EMA, and I'll show you a different chart. So on the weekly, I think at least we'll see a reversion to the mean, along with a possible pull down due to the market in general, and due to the housing market starting to slow down eventually, and bad loans numbers increasing, which we are hearing. The loan numbers of people in forbearance technically went up. Well, they did go up, what they reported Friday. And I don't think that situation is getting much better. Okay, so what else do we see? Excuse me. So you guys know I'm looking for short term. I think we get to the 100th day. And when I mean short term 100th day, with an election cycle this week, that could happen this week. Okay, that could happen this week. That could happen sometime middle of next week. Long term, meaning 3 months out, I do think we fill this gap. I think it's necessary. And I think once we get to the 100th day and lose it, like most of the stocks in its ETF, we will fill that gap because it'll just lead us down. It's basically a magnet. The 200 day will pull up and this will pull it down. What are we going to get? We're going to get it to stall out right around here, okay, which is the middle of this month, the 19th. Why is it going to stall out? It's dividend, right? They usually hold it up for dividend, then it gets a little bit of a sell-off. So I'm expecting a brief sell-off in the next 2 weeks. Then I'm expecting some chop, then a bigger sell-off as numbers come in. And then would like to be out of the trade before earnings. So what was the trade I set up, or that I'm looking to set up tomorrow? All right, Whirlpool. What do we have? Went over it. We have the daily squeeze, right? You can see it here. Daily squeeze. I know this isn't as big as the other chart I was just showing you. 90 to 95% of the index. Only reason 95% of the index is actually below its 100 day. Reason I'm telling you guys 90 is because some of them I don't correlate directly with Whirlpool, right? Like concrete company is not directly correlated with Whirlpool, but it's still showing home building, things that go in houses, right? Washers, dryers, everything Whirlpool makes are below the 100 day. What's the key pivot? 183.07. Why is that the key pivot? It's actually 183.08. No, I just labeled it there. That's the 55. A daily close below that, that'll be my entry on this. Okay, what's the short-term target? We went over that. 166.87. What is 166.87? The 100 day. Obviously, this will be moving. Is it going to move quickly? No, it's a 100-day moving average. So maybe over the next 2 weeks, it goes up a point or down 2 points, depending on how quickly the stock moves. But it will be right around that range. Okay, what's my long-term target? Not long-term, but first swing, 3-month target. I do think we fill this gap. Okay, I think it's going to be 149.27. So that would bring us down to here. What would that do on a weekly chart we should look at? So here's another chart I love looking at for swings. Okay, these are ATR bands. Very simple. Well, not very simple, but that's the 21. And this is 1 standard deviation up, 2 standard deviation ups, 3 standard deviations up. And the same thing on the downside. So let's look at the weekly. Okay, right now. And don't forget, these will curl as the stock slowly moves down. This is just a weekly reversion to the mean, 170. Okay, I do think we're due for at least 1 standard deviation down. That gets us to 156.64. But what else is going to happen? It's slowly going to curl down. So that would bring us to the 149.27. Over 3 months, which is the way I plan this trade, which will be roughly a week or 2 before earnings, I think that's around, we will test that before that time. Okay, you could look, everything reverts back to the mean. The mean is the area where you have kind of a balance of buyers and sellers. This thing hasn't been near its weekly mean in, I don't know, 1, 2, 3. Well, we could just look. How about there? Since June. Okay. What happened after that? It went 3 ATRs up. How long did that take? Well, it took from June 29th, basically July, till August 10th. That was a quick one. Now, we do know it was a quick market move. I have a feeling we're going to have a pretty decent sized quick market move down. Least will be a reversion to the mean. So what would be the best way to trade this? And as you can see, guys, as we go back, I mean, this was the March catastrophe, right? But normally it should get down. And this was during a good market, guys. Don't forget, this was all positive market, right? You just naturally, you test your mean on a weekly, and you usually go 2 ATRs down. You test 1 ATR and you go 2 ATRs. Obviously, this was off of bad earnings or bad earnings cycle, and then it bounced. So it was hovering, right? 3 ATRs down, came right back where, guys? Reversion to the mean. So that's the way I like to base a lot of my swing trades, is looking at reversion to the mean and where we are in the market. So obviously you can see here, 2 ATR down would be 144, even lower than our target. So how would I set up this trade, right? Because that's what it's all about now. We could look at every chart, every graph, have an idea where it's going, but with a VIX of 40, how do you set up a trade that actually makes sense? So here's what I was looking at that I made the most sense for me, to me, okay? Be a swing trade idea. It would be using a strategy called the diagonal, and it would be a December, November 165 put diagonal, okay? So I'll show you what we're looking to do. Cost would be $4. So we want to take in premium, right? I love those December 170s. Now, if I just bought those December 170s, we go to trade. Okay. We look at the December 170s. What would they cost me? About, let's just use the ask for argument's sake, $6.90. Okay. Not bad, but it's high, and we have a high VIX. So if premium comes in, I could be right, but I could lose $2 worth of premium easily, being right on the trade, but the VIX coming in. I could also gain premium if I'm correct on the stock going down with the VIX going up. But let's try to make it so we get a better price on the trade and also get a better premium. So what I look to do, and in case there's a steep, quick fall, right, to our first target in the next 2 weeks, which is 166.87, we want to use the diagonal. How do we set up the diagonal? Very simple. This is the construction of the trade. And I'm just teaching you guys some things and some strategies to use in this market, and that I will be using, because strategies you used 4 months ago didn't work last month. Strategies that you used 2 months ago didn't work last month. So you have to constantly be adjusting to what you see is going on in the market with volatility, with timing and how quick moves happen. And right now with news cycle, right? We're stuck in news cycle. So this is how the trade sets up. And what does that do? I'm bringing in $2.80. So what is the worst case scenario? Okay. Let's just say on November 20th, the stock totally plummets, goes all the way down to 150. Who cares? How much money could we bring in? Basically, we would probably bring in $5. We would probably max this out. Even though it cost us $4, those 170s would kick in a much higher value than the expiring November 20s. Okay. So you would bring in major value from setting up as a diagonal. Now, another trade I like doing is the calendar. What would that do? That would make this about $1 cheaper. The difference is we can't pick up that $5, right? We're just picking up the premium if we did a calendar on this trade, because we'd be using the 170s along with the 170s. So the difference is just going to be the premium. Using a diagonal in this trade, in case there is a wicked pull based off of the election, regardless who wins, or based off of COVID or any reason, we could still pick up that $5. So that's the way I like to set up this trade. What would be optimal for this trade is right around November 20th. We are right around 165, 166. We pull in all that premium. We will still own our 170s, which will probably maintain their value because now the stock has gone down roughly from here it'll go down $20, but the stock will go down quite a bit. Okay, so these will be going up in value. Okay, and these could possibly expire worthless. Now, if these don't expire worthless and they still have some value when we're coming a day before, what I plan to do, and I put it right in the notes, okay, is something that we paid $4 for. What I would like to do is turn it into a vertical spread eventually. So what that means is, and these are the strategies you have to use in this market. That means no matter what happens with these 165s, okay, we know December's, if the stock goes down, we know December's 165s are going to be worth more than the expiring November's. So we paid $4, we would sell these, and then we would buy these 165s. Now it might be 160s, it might be that 150 level. We don't know where the stock will be at in November, but what we do know is we can take in premium a second time. So that's the way I plan to handle this trade once it gives me the entry signal. And can I tell you what adjustment will be made on November 20th right now? Nope. I can't tell you if this will just expire worthless and we leave it and we turn this into a vertical put spread. I can't tell you if this gets in the money and we have to make some adjustment and turn this into possibly a December butterfly, a wide butterfly, right? to take in twice the premium. What I can tell you is, the most we could lose is $4. Oh, don't you start tonight. Okay. Most we could lose is $4. Most I'd probably risk on this trade because it's not really a $5 trade, right? Because we're looking to hold this longer. We just want to suck in this premium to lower that price of these, which are $6.90. We're kind of using it to buy it down. Think of it that way. My stop on this would probably be about $1.50. So if this went to $1.50, I'd stop out of the trade. But what my goal would be is to keep buying this down and eventually try to turn this into a zero cost trade, which I've done many times with diagonals and calendars. So what are some other options we would do in this? Well, doesn't mean once these Novembers expire, we have to go right to the monthlies and write the monthlies. Guess what, guys? We could write to December 11th, right? Taking some premium here. Now we can write the monthlies, or we could write the 4th, so we could write the 27th. So there's all kinds of adjustments you can make to keep buying down that price and eventually get the price, as long as your direction is right and the chart stays the same, get that price from $4 probably down to $1, if not sometimes we've even made it a credit on some of these spreads. So this is the type of strategy you want to use. And what does it take? It takes the initial trade, making the right setup, and then it takes making the proper adjustments. So that's one trade. Second trade I like, which I'll show you guys, is the simple XHB. It's a lot easier, doesn't move as quickly, right? It's the home builders, and it's really the same concept as Whirlpool. There's only one major difference here, okay? This was a Fibonacci-based trade. It has all the same characteristics of the Whirlpool trade, right? The sector's going below the 100, okay? Most of the components are below the 100. There's a few big ones keeping this up, and once those break, it'll break this down below the 100. But what do we have here? We have a Fibonacci cluster, okay? 5155 to 5098. And what do we have right here, guys? For those of you that don't know, that is it should be the 21 on the weekly. Let me just double check. And it is. So we'd revert to the mean. So once we break this area, we have no support. But what attracts me even more, now I took off, so you guys could actually see the chart. I took off about 1,000 lines. So the way you run Fibonacci clusters is you take all kinds of Fibonacci levels, and you could see I ran this off of a weekly, right? I did one Fibonacci level here, one Fibonacci level here, one Fibonacci level here. These are all weekly Fibonaccis. I ran it back here. I ran it back here. So what you get as you run all those different Fibonacci levels, right, you get what forms a cluster. So I found two very significant clusters. Now, if I left all these up, you guys would see nothing but 1,000 lines. Look like a 2-year-old draw the chart. So I just tried to keep the most important ones and highlight them. But if you do this yourself and just simply run the Fibonaccis, just like I'm showing you on the weekly, each one, okay, you will see, and literally, they're all the same. You can see all the angles. They're all almost exactly the same. You will get your clusters. And after you spend, I don't know, 20 minutes cleaning up all the lines, you'll see your big cluster is right here, okay? You have a Fibonacci cluster here. It was about 4 lines that lined up, and literally, what is this, within, can't see because it's red, but this was within, I don't know, 30 cents of each other. This is a major level. This 45, let's just call it 20. Okay, those are long-term Fibonacci's. So my belief is once we break this level, we will come right down to this level in weeks, right? This isn't a day trade. This is a few weeks out. What else is right here at this Fibonacci cluster, guys? The 200-day. It's been a while since we've had a 200-day test. Could the 200-day move above this as we trend down? Yeah. But this is a major Fibonacci level. I would look for support here. If this support breaks, okay, then when the market's in real bad shape, you have two other things to look for. We have a major weekly trend line. Okay, starts all the way back here. And I'm talking about 2012. Okay. And if you look at that trend line, just draw it, make it nice and thick. That is your weekly trend line, guys. Have we breached it a few times? Of course. Did we breach it in March? Yes. Did we breach it over here, yes, you can breach a trend line. But if you look, this is your major support trend line on this, okay? And this is actually your monthly trend line. That's why it's green. I use green for monthlies. I don't think we're going there. But the whole point of this was looking at the trend line falls in between these two clusters, okay? So if we were to lose the first major Fibonacci cluster, which should be support at that point, okay, we will go down here because you're going to hit that trend line and you're coming down to your next cluster, which is your next safety zone in 41. So I wanted to build a trade around that, especially since XHP, ETF, fairly cheap. You know, it's nothing you have to, it's not a Tesla. You don't have to look at it every day. Would you look at it? Yeah, of course. You just want to see where it's trending. And really, you just want to look at certain levels. Are we above the, you know, we'd probably stop out above the 55 or above the 50. Are you still below the 100? How are you trending? What are all the sectors doing? What you guys can do, you could simply, you know, get the ETF and find the major holdings in it. You could do it at ETF.com, or I can help you guys with this. I like to set that up for each one. So what was my idea in XHP? And it's the same concept. This is another short one, just because of what I think is going to happen with housing and also what some of the housing charts are telling us, right? I'll just go back. Okay. Let's pull that up once more. Where's my XHP? Here it is. Okay. What are these guys telling us? Which were the biggest runners up? That's not the right one. Where did that one come from? I must have pulled it up twice. Okay. That's the right one. Okay. What are the major? Okay. The ones that brought XHP up and put XHP on this run. What's it telling us? Lennar, home builder, losing the 100. DHI, home builder, losing the 100. Pulte Homes, home builder, losing the 100. Okay. The actual housing builders are losing the 100. I believe Toll was 2. I'll just put Toll here instead because just to see, guys. Nope, Toll's holding up a little better. So probably his earnings coming up soon, I'm guessing. But probably the next one to lose the 100. But the 3 big boys have lost their 100, which usually means what brought the market up, okay, what brought this ETF up is telling us it's probably coming down. Okay. Is Home Depot in this ETF? Yep. Would I consider Home Depot the same as the way I consider these? Absolutely not. Home Depot could still do good. Lowe's is in this ETF. So there are things you have to look at. But when you look at the home builders, okay, what you really want to look at that has the greatest tell is the actual, I guess, home builders, right? Pulte Homes, DHI, Lennar. So it's giving us that signal. So the way I constructed this trade off of that, or we'll be looking to, right? It's that first fib cluster break I showed you guys. Don't have to enter it tomorrow. And you know what? Even if it breaks it tomorrow or this week because of the election, I'd still want to see what it does around this level. But my entry would be the fib cluster break, or maybe put on a little bit, a starter piece. If I was planning to take 5 or 6 contracts or 4 contracts, I'd put on 1. Okay. Just to get the position on and started, but a break of this level, a break of like this 50.98, which is only $1 away. Now in this market, that could happen tomorrow. So maybe I'd put one on tomorrow. I know it's going to be volatile this week. I know we could probably be at 49.39 easily this week and below it. But I'm looking at the bigger swing picture and want to get the trade properly for that. Does it mean you could trade around it this week? 100%. You know, excuse my language, but if the shit hits the fan this week with the election, just meaning chaos and the market's not happy because of uncertainty or not knowing or whatever reason it may be unhappy. Of course, these things can pull back. I mean, I've seen models that show as much as a 20% pullback in the next 2 weeks. Not in the home builders, in the market in general. I've seen models a 10%. Most models show, regardless who wins, 10% pullback. Just if you guys like read some of the research and some of the other places, they're showing a pretty much either candidate a 10% pullback. Then they have other models based off of if the election gets contested or if we don't know the president for, let's just say, a week because of mail-in voting, you know, we could see a 15%. And then there's other models that show a 20%. And that's not including COVID. This is just election models they're showing, which is crazy. And we know, why is that possible? Why don't I think it's that crazy? is because look where the VIX is, guys. It's 40, okay? You know a VIX at 40, well, the next level is coming is 50. I mean, if you look at the 2016 election, we started, I think, at, well, let's look, just so I could show you guys. Well, let me finish this trade, then we'll look at that. Okay, so here's the way I constructed this trade, so I could stay on topic. Okay, same concept. I just like the January, December, 50, 45 diagonal put contract. So it's still a diagonal, okay? The approximate cost is $1.85. Why do I use January and December? I think the ETF will take a little more time, okay? I didn't use November because in order to do the diagonal, where is it? Sorry. It wasn't really, A, liquidity wasn't great. B, it's 50 cents. So what are you really bringing in unless you want to write every week? And you know what? Really don't want to write every week. Worst case, we max out sooner. So with the 45s here, right, we get to bring in probably, I was figuring 75, 80 cents we'll get to bring in here. And you could stagger. You don't have to get into the trade at once. You could buy, I'll just show you. You could buy the January 50 puts first. Okay. And then if you see the stock trending down, you could leg into the 45s and possibly get a dollar fill. There's no rule that says you have to put it on right away. I think it's easier. I think it's headache free. So you're not sitting there and then saying, oh my God, the stock's going the wrong way. And then you sell this for 25 cents instead of 60 or 75 cents. But it's the same concept. We look for this to expire worthless. Okay. Or max out and just take the profit, right? It'll be 100% easily. It'll be more than 100% if that maxes out because the January 50s will have a ton of juice in them. So if this is 40 or whatever, this will 100% is $4, right? Or whatever, 370. This could be $5, right? So it can make 150% on this trade. We could just let it max out and sell it and call it a day. Or you could do the same thing. You could possibly buy back the 45s and find a way to make more money off of it. Now, what would cause me to do that? It would be if I can construct a butterfly that causes a major credit, meaning basically makes my cost zero or below zero, meaning locking in a $2 profit, which if it does plummet, you could possibly buy back these 45s and write like these 45s or the 40s and make it a 50, 40, 30 butterfly, something like that. The reason I say butterfly, for those of you that don't know, is what I would turn it into. Possibly, you know, obviously the easiest case scenario is these expire next to worthless, but we're heading in that direction and we just rewrite them. But the reason I say butterfly is the beauty of a butterfly is you get to sell the middle strike twice. So it would basically give you room from 50 to 30 to make money, and you take double money on the 40s. So we're not using it because we think it's actually going to 30. I use a butterfly in this market to bring in that volatility and that premium of the middle strike I'm selling twice. So that's another trade, much easier trade. Really like this one. I'll be quicker to enter. I mean, it's got to set its entry signal, but I'll be quicker to enter this one because it's this ETF. It's easier. It's not going to rip your face off. It's a slow moving trade. I think either way, we'll bring in premium. We'll get to suck in that premium from the Decembers we write. So I'm not really worried about it. So I'd be faster to enter this one. And usually any ETF, I'll enter a little faster than I will something that could really bounce around a bit. But we do have the negative. We do have the negative squeeze starting here, which means we could be in for a big downfall. We didn't look at that here, so let me show you. We're already in a negative squeeze here, right, guys? We've broken the 21. We're almost at the 21 week. And same thing, we can look at the ATR channels. Where would that bring us? Okay. If we get to that 45 level, that would bring us to that fib level, and that would bring us about 2 ATRs down. So we are due for a reversion to the mean on the weekly. Again, just like everything else. A lot of stocks are different. And you can see the home builders do usually go up 1, 2 ATRs on the weekly, come down. Go up 2 ATRs, come down. It's natural, guys. This is the ebbs and flows of the market. This is what should happen, right? People buy on the mean and they sell it. There are algorithms that just sell 2 ATRs up. There are funds that sell 2 ATRs up. Short funds, they short it 2 ATRs down. These are normal movements. Straight up, like we've seen, is crazy. Obviously, this was crazy, and this was even crazier. So, I mean, look, you went from outside. This is a weekly ATRs, all the way up to almost outside the top ATR. Those are insane moves. You'll probably never. You could probably look at this chart on a 20-year. I don't even know what I'm on, but except for the crash of 2009, I don't even think you'll see it on something like a ETF like this. I mean, where are we? 2000. We had 1 week here. We burst up. I mean, you don't see a move like that. You don't see a move like we just saw. Okay. And this is 20 years back almost, right? You don't see a 3 ATR move from out of the channel to the top of the channel. It's got to revert back to the mean. And to be honest, it has to come down to 2 ATRs. Do I think this will land around here? Yeah. This is pretty big support. So I think that's a pretty safe trade. And again, with my swing trades that I'm going to be doing in the swing channel, I'm going to put on 8 to 12 a month. We don't load it up. There's not going to be a trade every day. It's not something we want to manage every day. It's a portfolio we want to build. And we look at it and we're going to beta weight it. Now let's look at another one. These next two are long. I'm not just totally short the market, guys. I think there are long opportunities. Okay, so let's look at Chewy. That's just one of my favorite stocks, guys. I think Chewy's the next Peloton run. Okay. Obviously, COVID caused much pet buying, a ton of pet buying, and it's convenient. I use it for my dog now. They finally allow me to order the approximate amount of food for a 155-pound Great Dane because the 1 month program wasn't working for me. So now it allows me to. But I think Chewy is the next company that's going to be the next Peloton, that a lot of the money that converted from Peloton, right? We had Peloton, if I could spell it right, have that crazy move up to 140. I mean, this was just parabolic, guys. There's no way to put this. Anyone that was in this knows this. This trade was ridiculous. Straight up. Now it's backing off. Okay, so money's rotating out. They're taking profits. I mean, if you rode this, and I know plenty of people did that rode it from 60, that rode it from 70. I know a lot of people that weren't in at 60. You got to take profit. They didn't take their profit here. They waited till they got scared when it broke to 21. That's when they took their profit. I don't know why you're not trimming up along the way, but that's what I would do. But I think Chewy's informed to make one of these moves. Also because I think funds and money is going to move into this stock, right? They made their Peloton run. So what are they going to do now? They're going to let it chop around in a wide range. Is Peloton not going to be fun to day trade? 100% it'll be. Are you going to get this out of it? Nope, I don't think so. I don't think it's going from here to when you hear the next Peloton sales, like 200. Maybe we'll test the highs again because of holiday sales. I know there's a 2-month wait for Pelotons, but I think the majority of the move has happened, and you just need a basing scenario for a little while. So what do I like? I like Chewy. Okay, has it made the same parabolic run? Not exactly. Has it been a crazy run? Definitely. Okay, there's no denying that. What are we finally doing on Chewy? And it's been very strong, except for the last 2 days. I mean, this thing was going parabolic. We traded it in the room. We had some butterflies on it. Some people just had it straight. Some people had equity. But this has been traded in the room pretty often. What am I looking for? I'd like to pick it up right around here, the 50-55, get a starter position on a swing. And if it goes lower, what would I pick it up at? What would I add? It would be the 21 right here as a major pivot. That's an old pivot we were using. This is where I'd add would be 54. So you got to give this thing room, right? It's Chewy. We know it could have crazy days. It's a pretty ugly weekly candle. So I think if this is a down week, we could possibly pick it up off the 55. Right? It's reverted to the mean on the daily. It's actually broken it. This is the next area I think it goes. But then I think it's up. I don't think we're going to get this 54.94. I mean, this is where I'd love to load the boat on Chewy long and just hold it. I don't think it's going to get that low. I think we'll get a test here, breaking this 50-55 area, coming into this area. Maybe 57.21. That's a major fib cluster here. Okay. That's what these two are both major fib clusters on Chewy, just so you know. I mean, this would be a great place to pick it up. And then I think it's going to basically have its run towards 81 to 100. I think that's where Chewy's going. So let me show you some ideas on Chewy. And for some reason, there we go. That was the clean. I knew there was a cleaner chart I was using. I'm like, why is it showing that? Okay. So this is what I'm kind of looking at, guys. The Fibonacci extensions on Chewy. A little better. Break of this. These are those still same clusters, guys. Those same levels you saw before. You want to see these hold. If we could break this, that would be a great place to pick it up. Where would you add this 52 to 54 area? Was the fib cluster. Okay. And what would we look for from there? We'd look for a bounce, and I'd be targeting the 90 to 100. Okay. The 161 is at 90. And where's the next natural place you go when you pass 90? Not for any other reason. You could see there's no Fibonacci level there, right? The next one's 113. The next natural level, once you pass 90, you go right to 100. It's like a magnet. So I do believe that's where Chewy's going. How would I make that trade? Let me show you. And if you look at Chewy also on the momentum weekly, we've got the squeeze. What do I think happens with the weekly squeeze for a little while? I literally think, like I said, we're going to break the 50 and we're going to bounce around. I don't think it's going straight up. I think we bounce, get some nice chop in it, and then it goes. Probably a run into earnings. Okay. That's what I'm looking for. So what's the best way to trade that? Right? This is weekly. Don't forget, not daily. So if you're looking on a daily, you still got about, I guess it'll be a month from here. So let's say we chop around for the next 2 weeks, then we start making that move. And then after earnings, it skyrockets and keeps taking off. What would be the best trade idea? Here's what I'm looking at. And I'll show you the reasoning. Okay. We want to see it right around the 50-55. Key supports that 55.24. Short term, guess what, guys? I don't think it's doing anything, right? I'm not looking to make a trade short term. I want to bring in the premium. I think it's 60 chop. Okay. Oh, but I don't know what I just did there. What does that mean? Very simple. I just think it stays in this range, maybe 60, 65. I don't think we're going too far. I think we'll have some down days in the market that pull it down. I think there'll be days this buying and Chewy pulls it up. What do I want to do? I want to bring in that premium. I want to bring in that volatility. So what's the best way to set up that trade? On this one, I actually like the calendar. A January, November 70 calendar. Now I love the January 70 calls. I think, like I said, I think we're going to 100 in Chewy. So I'd love to own those January 70s. But look at the price, guys. We just bought them and sat through it, which I know no one likes doing. They're not horrible, right? They'll be about $5 if it opens up tomorrow. If it opens down, they'll be about 4 and change. But why would we want to just own those when we can bring in some of the vol? Okay. Like I said, I think it's going to chop. So why not bring in $1.76? Make our cost $3.15. Right? Why would we want to pay, let's just call it 5 when we could pay $3.15? And the best part about that is this will be a calendar. So if it blows through, guess what? It's a simple trade. Let's say we were wrong. It blows through the 70 level in 2 weeks or something around there. 1, 2, 3. Okay, 3 weeks. Let's say it blows through 70. Guess what? We'll probably close the trade. It will be up 60%. Maybe a little more because we're using the Januaries, but 50, 60%. We could just be out of the trade. We can make it that simple. If it hangs around there, I'm sure you guys know what I'm looking to do. I want those Novembers to expire. We'll still own the January 70s. And what would be the trade? Well, let's look. What do we have coming up in Chewy? Earnings 12.9. So we'd probably just keep it flat, or maybe if these expire worthless, write some of these. I would probably make it a diagonal then, right? Because figure a little run into earnings. We'll see where we are in the world at that point. But Maybe taking another dollar there, bringing our 315 down to 215. Maybe use the, ooh, I'm sorry, guys. I wanted to bring up, maybe go with the week of December 4th, which will be the week before earnings, right? Maybe use like a higher one, like the 80s. Hopefully there'll be like $1 or something. You know, we're thinking about, we're trying to plan out a trade a little bit further out, but I would not make it a calendar again. I would definitely make it a diagonal. So at least we can make $10 and bring in some money in case earnings are crazy. But what's the main goal? Okay, get another write-in. And then where do you get your most premium, guys? What week? Well, the most IV is going to be the week of earnings, 12/9. So we will want to get another write-in on these December 11th. Okay, right now it's 91%. I guarantee you that goes up to like 157%. And that's when we want to write against those Januaries we're going to own. We can't decide now what we're going to write, right? We can't decide if we're going to use it could be the hundreds. Who knows where the stock will be? It could be the 85s. We'll have to make that decision then and see how many times we wrote. But that's the kind of game plan that I want to lay out for this stock. Love chewy long, want to take in some of the premium. Think we have some short-term chop in the next 3 weeks. We can bring in that premium and volatility. Remember, we don't even have the trade on yet. This week, I think the VIX is going to go up. So I think we'll be able to even get higher for those Novembers. So we want to bring in that volatility, buy down the actual option we want to own, which is the 70 calls. Okay. And see if we can keep buying it down and get that trade down to, if you plan it correctly, which as many times you can get it to a 0 to a credit cost, meaning you can't lose on it. Worst case scenario, like I said on this calendar, it blows through 70 to the upside. Okay. And we just make 50, 60%. Well, probably what it'll be with a 2-month calendar, 2-month spread, right? Because they're 2 months apart. How much would I risk on this? I would give this a decent amount of room unless the stock plummets, just because we know this can expire worthless, these 70s. We still own at 315, and we still have the earnings event coming up, right? So we'll have a chance to write again and write it down. So I probably wouldn't give it any stop until after that November 20th date. Okay, unless, I mean, if the CEO comes up with fraud or there's poison in their food, dog food or something like that, then you just exit the trade. But other than that, if it went down to, let's just say, the 100th day, 55, probably do absolutely nothing. What I might actually do is buy back the calendar 70s that we wrote, give it a little bit, and possibly write again, or write something different against it. You know, maybe it's time to write the Decembers. There's all different strategies you can use. But the beauty is you're bringing in premium, and you have time, so you can write a second time. Now, if the trade just looks like a dead trade, you exit it. But with these calendars and diagonals, it gives you time to ride out this crazy VIX, this crazy volatile market. So if it does go on a 3-day sell, panic selling, well, guess what? You don't have to exit the trade. You take that part off, you rewrite. You might even buy some more of the 21s if you get a crazy bounce. Who knows what and I'm just talking news cycle. I'm not talking like actual stock dying. You know, a news cycle event and a stock event are two different things. So that was another idea. This is one of my favorites. I mean, this is just I think it's a great long-term hold. Like I said, I think we're going to 100, probably past it. But this chart looks good. We'll see if it could break. I don't even know if it's going to break the 50-55. This is where I'd like to enter, right around here. See if we get the opportunity. But again, you could always buy something with a starter. Always buy one piece and look to add on swings. On scalps and day trades, I wouldn't necessarily do that. On swing trades, where you have 3 months, you can always buy your first piece and then buy your second piece, right? As long as it stays the same. Say, okay, the market's just coming down because of a news cycle. Worst case scenario, you bought one piece and it goes, and that's it. So you made money on one piece. Regardless, you know, depends on what your risk, not your risk, what your portfolio size is. So if you plan on buying 4 contracts, if it hits my prime target and is sitting there, I'd probably buy half of them. I'm just giving an example. If it just kind of wild and we're getting a random chop, I'd probably buy 1 to start. If it's not getting here, if we're coming around this area, and then see if we can get it down here. And worst comes to worst, if I have to buy it at 63 and buy 1 and it shoots up, so I make 50% on 1 contract. It's better than 0% on 0 contracts. But my plan would be buy it, chop, try to add in down here. Okay. And the last one for tonight, just since it's an hour, we're getting on to an hour, that I was looking at was Caterpillar. Okay, and this one I actually like a pairs trade. I don't know if many of you know what a pairs trade is. I can't really teach it tonight because it would take too long, but I'll go over the basic concept of it. Okay, pairs trade is when you take two stocks, similar stocks, one that you think has room to go up and one that you think might have to make a breather, that are kind of in the same industry, and you pair them together. So what I was looking at for Caterpillar, just on the straight swing, just to show you, is I love this fib cluster. Okay, we have a fib cluster at 153.36, basically. See that right here? You got two right here. And again, I did the same thing like I did before. I ran tons of fibs on Caterpillar, and that's where our fib cluster is. It held it pretty good. Support 149.49 at short-term support. You can see we support it to the T. Okay. Well, would I start buying it? Hopefully we get one day where it pulls down close to the 50, 55, or right around this cluster. That's where I'd want to buy it. Start my position. What's my 3-month target? 175.30. I think this one has room to get right around here. I typed that wrong. It should be 175.42. Let me fix that. Sorry about that, guys. And the sheet updates. So like what I just updated on the sheet, you guys can now see. And you'll always be able to see the swing idea document. Okay. So, and I think this one's going back up. So I like Caterpillar, just at earnings. I think it's going to settle down for a little bit, chop right around this area. Kind of same as Chewy. I think we just chop from here to here. I don't think there's wide range on this. I do think no matter who's elected, I think a spending bill's coming. I think they need it, right? They need it for the states. They have to start doing some kind of work, which is good for Caterpillar. So I do think a spending bill is coming. That's part of this. Aside from liking the chart, that's why I went with this one. So what kind of trade would I put up on this? And here's what I'm looking at. Okay. Short term, like I said, 160 chop, 3-month target. I had the wrong number written. Don't ask me where I came up with 175.30, considering the fib was right there. 175.42. The trade idea, just because it could bounce, I want to go longer out. Okay. Now you're going to say $6. Well, the reason it's 6 instead of maybe 4 or even 3 and change is because we're using the Januaries and we're making a diagonal, not a calendar. Because I do think this thing really has room to move. Okay. So I was a little worried that it might move quicker in case we get a quick spending bill. So I didn't want to use a calendar on this in case, you know, whoever the president is gets elected, says we need a spending bill. We're going to boost to help boost the economy in the states, right? The states need revenue. Come up with a spending bill. Caterpillar is a big beneficiary. So instead of using the calendar, where we could have probably cut it down another $2, decided to go to the diagonal spread, giving us that $5 room. Okay. Other thing, when's Caterpillar's next earnings? End of January, right? So I wanted to get in. I wanted to be in those Januaries. So the trade I came up with was the January 160, which you could say that's not a cheap option, guys. $9 and let's just call it 7. We'll go with the ash just to make it simple. So you can all see $9.70 option. And I wanted to make it a diagonal using the 165s. And you're pulling in 350, which is good money, right? It's in the range. I mean, this thing's got a 16-point range. So we're definitely getting something that could max out easily if it goes up. I have a feeling we're going to chop, but we'll see on that one. Okay. What's the real goal? You guys should know. Okay. After we've taken the premium from the November calls, I would just look to write the Decembers. I would look to keep this one nice and simple, because if it's working and we bring in that 350, okay, and this costs us $6, it'll be pretty easy to get that cost down to about $2.50 writing again. I don't know if it'll be a diagonal. I can't tell you if it's going to be a calendar. You know, we have to see where the stock is, where the market is, where the world is. We might be locked in our houses again. Who knows? But we will definitely be able to take in premium off of this trade. Okay, so my real goal is 165. See what happens. Again, worst case scenario, it goes above 165. We sell the trade. It'll be the same kind of markup with a 2-month spread. You'll get about 50, 60%, usually using a diagonal. But obviously the best case scenario is a slow drift up, be right around there or a little below it, or even 160, right? Just be 160 this week and just rewrite the Decembers. You'll pull in 350. And then what do you have? The week after this, you have the earnings event. So I like that. So you can even look at this, guys. You could do 3 writes, right? We could write the Novembers, just like we start to make it $6. Then we could write any of these weeks. I'm just using the monthlies to make it simple. There have been times I've written every other week and brought it to like a negative, ridiculous cost, like negative $1 credit on spreads. Okay, write the Decembers, take in that premium, then you can turn it into a call spread or a butterfly and have guaranteed money. Or lock in guaranteed profit with the ability of home run profit. So that's the way I like to handle swing trades, at least in this market. I always usually handled swing trades, regardless of a VIX of 40, using spreads, just straight vertical spreads. You know, I wouldn't be doing as many diagonals and calendars, but with like the lower VIX. I'd be just using vertical spreads for the month I think we could get there. So like Chewy, I would just do a simple January 9100 spread. But because premiums are so high, we want to be able to try to take in some November, some December premium, and then have it what we want. So you have to get a little creative and use some, not creative, you have to use some methods that were built for this kind of market, which happens to be a little more complex spreads, which really aren't that complicated once you get used to them and learn how to use them. So those are 4 trades that I like right now. Now on swings, I find them, you know, I go through it all the time. I like finding swings better than day trades because, you know, it's a longer term outlook, right? You're looking at a chart and do I care what happens tomorrow? Yeah, I care what happens tomorrow. But I mean, I'd rather look at the weekly and the monthly and see what we're doing there and saying, okay, maybe we come down. Maybe we do test the 21. Maybe the whole market comes down to that 10%, 20%, like they're saying after the election. We get the reversion to the mean, then we get the pop. You know, but you get to see cycles, and the Fibonacci levels play much better in longer time frames. They work in dailies. It just happens much quicker, right? I mean, you guys see in this market how quick you have to be. This is a scalper's market. It's either a swing trader's market or a scalper's market right now. Trying to predict anything other than that, you'll get whacked. So it was last month was definitely a crazy month, totally different than September. And September was a crazy month. And I think these next 2 weeks are going to be crazy. Let me show you guys the pairs trade. So what would a pairs trade be? Okay, this is not at all-time highs. Okay, it's past the 21, and it's near its 50. So if I want to go long Caterpillar, what would I pair it against and go short? So I'm kind of on both sides of that segment. Deer, right? If I think Caterpillar's got more of the growth and Deer just went on a ridiculous run, okay? Basically a parabolic run Deer went on. So I think a pairs trade you could do, I did not set this up, I'm just setting up straight long, straight short, but something I would look at is possibly long Caterpillar, short Deer. And that could simply just be rotation of money, right? You might have people rotate out of Deer and go into Caterpillar, okay? But that's what a pairs trade is. That's like, just to give you an example, I know a lot of people right now are long Delta, short American Airlines, which is just a trade they have on. Big funds have that on, thinking American Airlines not going to make it, or somebody's going to have to get forced to be bought out. Who knows? But that's called the pairs trade, guys. Or you could do another good one is, I'm just giving you an example. I'm not taking it. You could be long banks, short the TLT, right? Because banks usually goes up as the actual bond goes down, but the bond rates are going up. So that's a pairs trade you could do. You could do it with the dollar and commodities, right? You go long the dollar, short commodities, or short the dollar, long commodities. Those are pairs trades. So that's a different way of trading. It's kind of a hedge, and sometimes they both work out, right? Like Caterpillar can go up and Deer could go down. They could both go up, right? It doesn't mean you can be right, but it's a pairs. People do it to kind of, it's a hedge swing trade. You don't do it on a day trade, guys. You just do it on a swing trade and longer outlook. You know, you could find the strongest in this ETF, right? The home builders. Find the strongest company that you like the best, or the one that you think's the beating down the most, that might have the most room up. Short the actual index, or buy puts on the index, and go long the one that you like, right? That's a pairs trade. So, or you could be short home builders, long Home Depot, right? Maybe they're not going to buy homes, but you're going to fix homes. So those are some examples of swings I would put on using pairs trades. Obviously, I'm just giving you ideas and stuff and kind of explain to you guys what a pairs trade is, but that's stuff I'm always looking at. So that's the basic swing program. It's going to start getting much more active than it was. We were concentrating 90%, 95% on day trading. But in this market, I think swing trading, definitely worth putting some things on right now. Definitely see opportunity both to the downside and the upside. And it's also, you don't have to sit there and worry about the trade. You keep it in a separate, or you can keep it in the same account, but I keep it in a separate portfolio, just a separate account. And I have my swing trades and I look at it. And you know what? If you want to hedge your swing trades, you could always just do, those of you that are in my room now know I always beta weight, look at beta weighting. That just means you're hedging your portfolio over overnight volatility, which hopefully at some point in the next month will come down. But you could weight it so you're basically flat over the weekend, no matter what happens, right? Give or take 3%. So that's the swing trading. That's what we're going to pick up quite a bit moving forward. Haven't had time really to concentrate on the swing trading because day trading has been so busy, but we are going to start concentrating heavily on swing trading, and that's it. Oh, let me show you that VIX thing. So just so you see, all right, we're at a VIX 40 now. We don't even have the election yet. Last election, what did we do? Just so you know, I'm going to go back a little further. Okay, where the heck did November go? It came over. Look at that, guys. So if you basically look, we went from 12, okay, before the election, to 22. We didn't even double. Okay, look what we're doing here, guys. I mean, depends what you want to look at, but 24, we're not even, we will get to 48. I mean, I see people putting on 80s. I see big VIX traders buying 80s for the monthlies. Well, VIX doesn't trade monthlies, but it's close to for these. I saw 80s coming in ridiculously amount. Yeah, look, you got hundreds coming in. This was put on, these hundreds. So they think it's going to get crazy, which means the VIX will go up a lot. Oh, wait, you can find so there's all different swing programs. I'll come up with a swing trade deal for everyone that was part of the webinar. I'll just email it to everyone that signed up. If you didn't, guys, if you didn't sign up, just sign up for, where is it? It's in my, if you go to my Twitter, just sign up to this thing, the live webinar. And I'll send out a special to everyone that registered in that email thing with some kind of deal. It's $99 a month regularly, but I'll set up something where the rest of the year, 2 months and something with classes. So you can, I don't know if you guys know any of this stuff. So I'll get you, I'll set up something which gives you the Fibonacci class with the indicators. Well, there are no Fibonacci indicators. That's just the class. But I'll give you the ATR indicators, ATR class, basic, I'll include a lot of educational stuff because you guys have to learn to do it. As much as you want to just follow people, you really should learn. So for this, you kind of need the Fibonacci class. My basic setup, which is this clean. I don't know, do I have one clean? Yeah, probably Masco because I haven't traded in ages, which would be this, what EMAs I use. So I would include like 7 or 8 classes and 2 months. I'll come up with some special package for that, and I'll put that in the email. But if not, you could just go to the regular website, and it's $99 a month. You don't have to, it's not live. Well, it's live alerts, but it's swing trading. So it's not like it's not live Zoom all day. We will do once a week or once every other week, we'll do exactly what we're doing, webinar, and we'll go over trades. Or it might be recorded. We'll see. Might just do a recorded one with 5 or 6 trades I'm looking at for the week, but you'll still get the alerts, guys. But I want you to understand why we're taking them, right? And the same thing, there'll be a Google Doc each week you can get into. Probably it'll just be it won't be a Google Doc. It'll just be in the Discord room, but it'll look exactly like what you saw today. I lost it now. Yep, I lost it. I don't know what I did with it. But you'll get that Google Doc that shows you all the trade idea, easily written out, and a video explaining all of it, just like you've heard tonight. So that's the game plan. That's what I'm looking to do. And just for myself, I want to put more swings on. I have a bunch of swings on, but I'm going to get into more of them because I see more opportunities in sectors that are either haven't risen enough with the rest of the market, or B, have risen way too much and need to revert back to their mean. I don't know if there's questions here. I don't think I activated questions. If you have any questions, guys, you can email me or DM me through Discord. But that's it. I'll just look in the regular room to see if anyone has questions. I don't think so because I didn't activate questions for it. No, that was dumb of me. All right. I hope you guys enjoyed it, and hope you learned something about swings and how to look for them and reversion to the mean. And if you're interested in signing up, like I said, you could just go to the website, breakingoptions.com. You could just sign up for the regular swing trading. You get everything we just spoke about. It's just $99 a month. Or else, like I said, I'll set up some package for like 2 months plus educational for obviously cheaper than what all that would be. So, all right, guys, have a good evening. Get ready for tomorrow. And I guarantee you we don't open up where we are right now at those levels. Have a good one, guys. I'll speak to you later. Good night.